Hey, it's Michael Saul, but everybody calls me Tiny. This video is Aint Hindsight Grand. This is stock market analysis for the week of October 15th, 2018. If you would like to receive intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow the directions, and you will be on the distribution list. The Facebook group is facebook.com/groups/attackthemarkets. If you like what you hear on this video, click the subscribe button so you never miss an update and smash that bell so you're notified. Also, give me a thumbs up and leave a comment so I move up the ranks in the YouTubes. Okay? All right, great. So let's talk about the title of this video. Aint Hindsight Grand or Great. I forget. I don't even know what I wrote, but one or the other. All right? So the point of that title is everybody that is now coming out of the woodwork saying, oh, we knew this was going to happen. Oh, I knew this was going to... Well, really? Did they? Because I will tell you, the people that knew this was going to happen knew it here and here and here and here. And, oh, I told you. No, here and here and here and here. Okay. Here is what I have been saying for months. When the market is in a nice, strong trend to the upside, your job is to continue to look for pullbacks to buy. However, not to get Pollyannish and think it's going to go up forever. I am not by any means saying I called this, I knew this was going to happen. No way. No way. First of all, we'll get to what this is in a second. But, as far as thinking that, we were going to see a sharp pullback like this and it was going to happen right after new highs. No, I was talking about the Dow having to hit new highs before the work was complete. But no, I did not think once the Dow hit new highs, that would be all she wrote. And guess what? I still don't think that's the case. I still don't think that we are going into a bear market here. But I just love the Monday morning quarterbacks coming out saying, they knew this was going to happen and it had to happen. Yeah, it didn't have to happen. In my opinion, this to me looks like just a pullback, yes, out of the ordinary, right? Because these would be the ordinary pullbacks, but this is a pullback in a bull market. I believe, just like back here in January into February, I believe that it will be resolved to the upside. That's what I am thinking. The one problem I have with that opinion, and like I said, that's my opinion, is that I'm hearing it a little bit too much. A lot of people are coming out saying, yeah, this is just going to be a blip. It's no big deal. It's a regular pullback. It's definitely not regular. Okay? Regular pullbacks would be these little guys. And, maybe it goes a little bit longer than expected, which is what I thought this would too. This actually went much more than what I was thinking. I was thinking maybe it was going to pick up some symmetry there. So now what we want to do is let's grab a line and measure what the last pullback was here. All right, I got to adjust this, but for some reason I need a new freaking monitor too. I got to go get a new monitor. I'm all screwed up here. All right, create the parallel, and then we go to here. So this pullback could go down to 260 on the SPY. Okay, and it would be the same length, and that would be a symmetrical move. So we are below the 200-day moving average. We closed below it Thursday, and we closed below it Friday also. This is on the S&P 500. We'll go through the other majors as well. That's not a good sign. However, it doesn't automatically switch us into a bear market. Off the highs, we're down... down about 20 points, a little bit less. Right? That's not the end of the world on a close to $300 index, about 7%. It's less, right? But I'm just using round numbers. So that's not bear market territory. I would have to be almost 3 times that amount to be official down 20% bear market territory, right? So I am definitely not in panic mode. However, my plan going forward is I want to see how we bounce and what that bounce sets up. It should set up a coil of some sort. That's usually how the financial markets work. And then from there, I will be able to have something to lean against and look for a break one way or the other. All right? So, by the way, my monitor is, like I said, I got a problem with my monitor. It's flickering. If you're seeing that flickering in the video, I'm not going to know until after it's done. I apologize. But it's not completely terrible that you won't be able to see what I'm talking about, but it's annoying the living crap out of me. All right, so that's what I'm looking for. These are the Fibonacci grid that I have on here. It takes the February low to the all-time high since then. Well, all-time high forever, but the highest high since then. And you can see we have the 62% retracement on the SPY coming up at 268.70. That's next resistance. I'm sorry, that's next support. And then we have the measured move down here at 260, which is also right around the 78.6. I do think it's possible that we do get there. We have the symmetrical measurement. We have the 78.6% retracement. We'll shake out a lot more weak hands, etc. All right, the Dow. I didn't put a Fibonacci grid on the Dow, but we did hold the 200-day moving average. So we want to watch that. The Russell. Yeah, the Russell didn't get the same sort of bounce as the S&P. Barely closed green. And it has its 78.6% retracement coming up right here. Where are you? Come on. At 149. We'll call it 149.15. That's also the bottom of this triangle that it broke out of back in May. Mid-caps, they have their 78.6% retracement coming up as well. Call it 333. And then you got the NASDAQ, which is holding up the best. It bounced off its 50% retracement, already on the bounce, had a pretty decent day on Friday. But if this last week's lows give out, you got the 62%, 61.8, 62% retracement at, where are you? Come on. At 164.44, and then the 78.6 down here at 158.18. All right, let's go through some of the sectors like we usually do. Yeah, semiconductors. I mean, they were lagging for months at a time. They were just going sideways rather than trending up. But again, watch hole number 1200. I don't know what this, I would really like to get rid of this line. I'll have to do it someday. But anyway, watch 1200, and then you have next support down here at 1170. Look at some of the stocks. KLA Tanker, yep, it's not acting as well as some of the others. Again, it was just moving sideways for the most part. Support down there at 88. NVIDIA. Yeah, NVIDIA closed Thursday below the 200-day, but got back above. Again, will this just be a blip? Not necessarily sure it will. I want to see the next setup. I want to see the next coil. What about Intel? Yeah, Intel not acting so hot either. Looks like that wants to go down to test the bottom of this range as well. But again, I want to see the next setups that come out of this. How about the banks? So the banks pushing down here. Here's Bank of America, JP Morgan. They do not look like buys to me here, right? Citigroup. They do not look like buys, but they definitely look like, okay, let's see what the next setup is going to be. All right, that's and maybe that sounds like a cop-out to you, but to me, it's not, right? After we get a big thrust, I want to see where the next pattern sets up. That's the most important thing to me. Not trying to guess the bottom, not shorting every single uptick. Let volatility calm down, let it move to an equilibrium point, and then go with the breakout. Okay, that's the most prudent thing to do. Yes, you're definitely missing the bottom. Sorry, I've caught some bottoms, but I will tell you they're more I was going to say they were more than likely, but I'll just say they were definitely luck. I've picked some tops, I've picked some bottoms, luck. Okay? That's not what we're here for. We're here to see the bottom become hammered in, and then look to take the next continuation pattern, or look to get on the next breakout, etc. All right, so here's Goldman. Watch Goldman down here, 209.61. It's basically right there anyway. That's support. I mean, if that gives way, yeah, this could go sub 200 for the first time in a few years here. This could be one big topping pattern here. Here's Morgan, not looking any better. Here's Interactive Brokers, something was screwed up with my chart here with Interactive Brokers. Whatever, I'm not going to go crazy for it. Here's Biotechs, which had been outperforming. They took a nice push down, held the 200-day moving average though, so that's good. Here's Biogen, still not really one to watch. Same thing with Gilead. Go to like an Amgen. Yep, so Amgen's more mimicking the index. So you have a nice pullback here and then a pause. Again, I want to wait for the next pattern. Let's look at some of the glamour stocks. Amazon came shy of the 200-day before, getting a bit of a bounce. See what it wants to do from here. Apple's showing good relative strength. Apple's one I would definitely be watching if we decide to turn and burn from here and get a nice rally, because Apple is definitely showing good relative strength. Netflix held the 200-day moving average. The Alphabet below the 200-day. Let's see what it does if it comes back and tests it. Here's Tesla. I don't know why I know why I keep going all this, because I get a lot of questions on it. But Tesla is in. See, this is exactly the type of pattern that I want to watch for here going forward. Right? So we had volatility, and now we're coiling up. I want to see which way it goes from here. Not with Tesla. Okay, I could care less about Tesla, but with the overall market, with some of these glamour stocks, I want to see a pattern like this set up and then go, then decide which way to get in based on which way it breaks. Here's Caterpillar and John Deere with pullbacks. Again, a lot of slop. Now, the reason that a lot of people are blaming for the pullback, the current pullback, is bonds. Rates were rising too high. Also, rising too high too fast, so they were getting overbought. But this week, they wound up getting a bounce. So, right, bonds wound up getting a bounce. But to me, this looks like it could be a bear flag, and we could proceed to lower prices, which would mean rates would continue to rise, and that could put continued pressure on stocks. Another reason is the trade wars. Trade wars aren't over. The trade wars aren't over. The trade wars aren't over. So there's a lot of concern with that and how it's going to affect equities. To me, I think the trade war part of it, at least, I think that President Trump has proven that he's made some stronger moves here. So I do not think in the long run that is going to have a lasting effect on the market. Now, I could be completely out of my mind here. All right. And of course, that's just a theory. It's not enough to say, oh, the trade wars, it's overblown, just buy here. Notice I haven't said that once. All right? That's not the way I'm looking at this market. Again, I'm going to go back and finish up, but I'm looking from here for us to form some sort of coil like we see here in Tesla. And again, I'm not interested in Tesla, all right, but in the market. I want to see some sort of coil, and then I want to bracket it, and I want to look for which way it releases to, and of course, to make sure it's not a fake out and just releases one way and then just doesn't stick. But bonds, to me, they look lower, or at least to go on a test of the previous lows. Oil, which had popped up, is now back below its July 4th high. And that's a key high, because that's usually the seasonal high in oil every year around that time. So the fact that we're below it, that's something to definitely pay attention to. And gold, which I've been saying for a while, doesn't look like a bottom to me. Still doesn't, but did get a nice push on Thursday with a little flight to safety. To me, this looks like an A, B, come on, I'll have to start it from here. An A, B, C pattern, right? Something like that I'm looking at. And then from there, it falls back down. I do not see gold putting in a bottom here. We're below the 200-day moving average. And again, could I be wrong? Of course I could be wrong. Just showing you what I'm seeing with the charts. So for this week, I want to see what happens Monday. A lot of people are saying we could crash Monday, but that's all the time when there's weakness the week before like this. They're always calling for a crash. I don't see signs of a crash, but I don't even know if that's really... I don't even know if I could say that, right, and be taken seriously. What do you mean signs of a crash? You don't see the signs of a crash until the crash is happening, for the most part, right? Anyway, what I'm looking at here is I want to see if we get further weakness. I think we can come down and test the Fibonacci levels I've highlighted in this video. Go back and look at them. But they may be worth a buy down there. If you get an intraday pattern, if you're trading intraday and you get an intraday pattern you can lean against, that's fine. But to me, I want to see what sets up on the daily chart. I want to see some sort of coil set up, and then I want to look for continuation or a reversal, either continuation in this direction out of the coil or reversal back out of it. That's what I'm looking for. I didn't look at the Zuck book. I wanted to look at the Zuck book because we did come down and, yep, we tagged those March lows. So now we're bouncing here, but if we get continued weakness, we could go through these wind up coming down to this next level down here at 145. Questions, tiny@attackthemarkets.com. Join the mailing list to get intra-week updates. Have a great trading week, and I'll talk to you soon.